let's say that Bitcoin can go from 100,000 to 1,000,000, so 10 times. MicroStrategy will go up more than that because of its Bitcoin strategy. If someone's buying MicroStrategy, they're buying it for the Bitcoin exposure. But Ethereum today is 4,000 roughly. We show that if Ethereum's price ratio recovers to its all-time high against Bitcoin, then Ethereum will outperform Bitcoin by 5 times. Okay, meaning if Bitcoin goes to 1,000,000, and that's 10 times from here, that means Ethereum could go up 50 times. So if MicroStrategy will outperform a 10 times rise in Bitcoin, Bitmine will outperform a 50 times rise in Ethereum. So in a way, and these are the 2 largest crypto treasuries in the world. The choice is really understanding that Ethereum is facing a positive innovation cycle that markets haven't yet recognized, because it's been for 5 years, it's been a chain that's been slowly improving, but now this is the moment.
Today, crypto investors are debating whether Bitcoin and Ethereum might see a price drop in the coming week. This cycle is heating up, and Tom Lee remains bullish, anticipating a parabolic rise in the final months of 2025. Forced selling, leveraged bets, and the usual tug-of-war are expected as assets approach key barriers, but the bigger picture looks very different. Analysts are drawing striking parallels. Ethereum today may be in the same position Bitcoin was in 2017, when it surged from $1,000 into the financial spotlight and captured Wall Street's attention. Now, Ethereum is catching the eyes of institutions, hedge funds, asset managers, and major investors who see its potential extending far beyond speculation. Bitcoin, meanwhile, has been trading more like a risk asset, meaning a market recovery could push it higher, but if the market stalls, short-term pressure is possible. Bitcoin currently sits just under $116,800, up nearly 25% this year. Adoption continues to spread, from decentralized finance to stablecoins, while regulatory developments may increasingly favor Ethereum. This positions Ethereum not just as a digital currency, but as a backbone for future financial infrastructure. As Tom Lee emphasizes, this is likely only the beginning. With Wall Street involvement deepening and retail interest still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb, it's how fast it can write the next chapter in crypto history. Let's dive into Tom Lee's latest interview for his market predictions in the days and weeks ahead. President Trump just opened the door for 401k funds to invest in crypto, unlocking a nearly $9 trillion market. That means millions of Americans can now put retirement savings into digital assets, and you can start today. If you have an old 401k or employer plan sitting in boring stocks or bonds, roll it over into a crypto IRA with ITrust Capital and position yourself for the crypto boom that's building now. With ITrust Capital, you can buy, sell, and hold crypto 24/7 with top-tier security and enjoy the tax advantages of an IRA, no capital gains taxes like regular exchanges. Plus, they offer the lowest fees in the industry. Open an account today with promo code DOSE7 for a $100 funding bonus. Over 10,000 5-star reviews. They'll help you roll over your funds quickly and easily. Don't wait, beat the crowd.
One, if anyone's buying crypto, they have to use a long-term time horizon. So they shouldn't worry about the price 1 month from now, but they should think about where it is 5 years from now. And that's how we've always approached it. When we wrote about Bitcoin, we always wrote about prices 5 years from now. And that's why even today, I think Bitcoin can still get to 1,000,000. That they have to understand there is a huge transformation taking place on Wall Street, because AI and blockchain are really going to disrupt traditional Wall Street. And so they should really bet on a future where that innovation is going to take place. And part of it is Bitcoin, because that's where you store value. But a bigger change is on smart contract platforms like Ethereum. So to me, I think Ethereum is in a super cycle. Like, it's just the start of what I think is going to be a really explosive rise over the next 5 to 10 years. The stablecoin industry is the first really widely adopted crypto product. That's why we called it the ChatGPT moment. And stablecoins work really well. Merchants love it because they don't have what they call chargebacks. And exchange fees are much lower. If a merchant accepts Visa payments, for instance, that's 2 to 3% of the charge is taken by Visa. And if there's a fraudulent charge, the merchant is forced to lose money on that transaction. There's never any fraud on a stablecoin because it's a bearer instrument. Consumers like stablecoins because it's less expensive to carry a USDC than to have a bank account. And then the stablecoin issuer makes money on a stablecoin. Stablecoins also are big owners of U.S. treasuries. In fact, collectively, they're the 12th largest holder of U.S. treasuries. So it's a very good model for the United States. And I think banks have looked at stablecoins initially as, they didn't really like the product, but now that they've seen the adoption, they've become interested in issuing their own stablecoins. Stablecoins, I think, the primary distinction today is really U.S. compliant stablecoins like USDC and PayPal versus Tether. Because Tether is much bigger, but it doesn't operate in a compliant way with U.S. OFAC, U.S. regulatory requirements. Because in the U.S., in order to have a stablecoin wallet to receive it, you have to have done what they call KYC, know your customer. It's a standard anti-money laundering process. So anybody who opens a bank account in the U.S. has to do a KYC.
Okay.
But Tether doesn't require KYC. That's why it operates so widely outside the U.S. 80% of all stablecoin transactions do take place outside the U.S. at the moment. So it's much bigger outside of America. But, today there's, in crypto, you can just use cross-chain. You can swap Tether for USDC into a compliant wallet. So there's interoperability. So JP Morgan, Goldman, Amazon, Walmart, they'd love to be in the stablecoin business because then they can capture the benefits of issuing a stablecoin. I think the strongest ones are going to survive. JP Morgan and Goldman, I think, are going to be huge winners from blockchain because they, as you said, they have enormous positive reputations with governments, with institutions. They have a brand that's recognized. And crypto is a way for them to re-engineer their businesses to save a lot of money. So I think that the biggest U.S. banks are going to become global winners in crypto. The stablecoin market's going to get competitive. So Circle is the biggest stablecoin after Tether. I don't really know the financials of Circle that closely. So if someone is interested in owning that stock, I don't know. But stable coins have to run on a blockchain, right? So Tether, USDT and USDC, they operate on top of an existing blockchain. And the majority of stable coins, over 60%, are operated on Ethereum. So Ethereum is where most of the stable coins are actually operating, and 36% of the fees for Ethereum today come from stablecoins. And
that's a lot.
There's a stat that was just published over the weekend, but in just the last 7 days, about 7 billion of stablecoins were created on Ethereum, which is greater than the amount of stablecoins on Solana over the past 5 years. So more stablecoins creations are taking place on Ethereum. So I'd say if you're betting on stablecoins, you should bet on Ethereum.
Yeah, it's like betting on Ethereum. Okay.
Yeah, and that's just tokenizing the dollar. Wall Street wants to tokenize the stock market, and they want to tokenize bonds. That tokenizing mechanism is the same essentially as tokenizing a dollar. So that's where Wall Street is, again, doing most of that work on Ethereum.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 comes to a close, Ethereum has outperformed most major crypto assets, fueled by record on-chain activity, rising developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum suggests it could lead the next phase of growth, setting the stage for what analysts are calling its strongest run yet. Tom Lee, ever bullish on crypto, predicts explosive growth on the horizon. With giants like BlackRock entering the space, he reassures that a long-anticipated surge is coming. By the end of 2025, he forecasts 1.1 billion active crypto wallets, a pace of adoption that's almost impossible to grasp and could represent the fastest accumulation of wealth the world has ever seen. Drawing on a career's worth of research, Lee concludes that liquidity drives everything, and crypto is positioned to be the top-performing asset class. Every chart, every trend points to the same reality. The crypto market is on the brink of an unprecedented expansion.
So my friends thought Bitcoin was... So my friends that are in the financial business, they are the ones who missed Bitcoin. Because in 2017, their knowledge of the world is traditional stocks, traditional bonds. They didn't think crypto made any sense at all. So they were very skeptical of Bitcoin. And in fact, many ridiculed my views about it. Of course, now they acknowledge it was a great idea.
I think they'll regret it.
Yeah. But now when I tell my friends about Ethereum, my close friends still do the same thing. They're like, Ethereum, it hasn't done anything for 5 years. Why would I buy Ethereum now? So my closest friends are still very skeptical. The choice is really understanding that Ethereum is facing a positive innovation cycle that markets haven't yet recognized, because it's been for 5 years. It's been a chain that's been slowly improving, but now this is the moment.
So what's your general outlook for other different sectors?
Well, I'm still bullish on U.S. stocks in the final few months of 2025, because there's two things that are positive catalysts. The first is that the Fed is going to resume its cutting cycle. And we looked back. So if you look at the entire history of monetary policy, the Fed has never resumed a cutting cycle in the fall. So it's only happened 2 other times in history.
And you're expecting this year as well?
Yes. Yeah. It's the Fed has signaled. So this would be the 3rd time. The first time was 1998.
Yeah.
The second time was 2024. And this is the 3rd time. In all the 2 prior cases, the stock market boomed in the 4th quarter because the Fed has been on pause and then they're finally cutting. The second is that the business confidence, the ISM manufacturing, actually has been below 50 now for 29 months. It will probably recover back to 50 once the Fed starts cutting. That's the longest stretch of the ISM below 50 in history. So that's really good for industrials and financials and small caps. So I think that this fall is a really broadening of the stock market rally, where the banks and the industrials and the small caps are going to do as well as large cap tech. But I guess I just point out 2 things. One, when the Fed resumes its cutting cycle, they have a lot of room to cut rates further, because the Fed funds is at 4.5% right now, and inflation is probably closer to 2 or 2.5%. So it's the real interest rate is extremely tight. So I think there's a lot of room to cut. That will take a few years. I think this is really bullish for stocks. I think the most important message I would leave you is that when you think about whether it's stocks or crypto, you should understand that in the stock market, you really want to buy the best companies. That's why Tesla, Nvidia, Palantir, these are the strongest businesses, and they have trends that are not sensitive to the economy.
Where does this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now drawing the kind of institutional attention that once propelled Bitcoin into the mainstream. Analysts are increasingly calling this Ethereum's 2017 Bitcoin moment, where years of groundwork finally meet global recognition and major capital inflows. But this cycle is different. Ethereum isn't just a digital currency, it's the infrastructure behind decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are starting to take seriously. That blend of utility and adoption is why many see $5,000 and beyond not just as a price target, but as an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets, and top analysts, including Tom Lee, stress that its real growth story is still unfolding. With Wall Street involvement rising, developers innovating at record speed, and adoption spreading across industries, Ethereum is poised to become a defining force as we head into 2026. Short-term swings may make headlines, but the long-term trajectory is clear. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. If history is any guide, the breakout we're witnessing now could just be the opening chapter of its biggest run yet.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.